Here is an example of a double top. So we have the price moving higher in a solid medium-term uptrend, achieving higher peaks, higher troughs, higher peaks, higher troughs, and then it moves up to form yet another higher peak. So up to this point here, things are looking fairly good. And as the price moves back down and forms a trough down here, it returns back up, and we expect, based on the prevailing medium-term uptrend, we expect this price to continue higher and set a new higher peak. However, notice what's happened. We have found that the new peak that it's achieved after a couple of days of moving lower, the new peak it has achieved has failed to move beyond the previous peak, in this particular case at $15. Well, that's some cause for concern. It's not that's it, it's never going to go up ever again, and it will start crashing back down again, but it's certainly enough to raise a doubt over the strength of this medium-term uptrend, because as we've seen in the past, good solid medium-term uptrend, higher peaks, higher troughs, and now we've failed to achieve a higher peak. The key level now becomes the previous trough, this trough here in between the two peaks. Because if the price breaks down below this previous trough here, not only have we failed to achieve a higher peak, we have now also failed to achieve a higher trough, because our new trough is going to be down here somewhere. So we now have two question marks over the strength of this medium-term uptrend. Furthermore, the definition of a medium-term downtrend, of course, is lower peaks, lower troughs. We've really just now established a medium-term downtrend. So remember, if we form a double top, it's important to wait for this middle trough here as the key level, because this may just come down to trade down here, reverse, trade back up again, and off she goes, and this is really just a slight hiccup in what was already a solid medium-term uptrend. But the key level, if it breaks back down through that middle trough there, the middle trough between the two peaks, if it breaks back down through there, then that's certainly a double top has been completed, and your double top is just a classic medium-term reversal signal. And sure enough, in this particular case that I selected, the price just went lower and lower. Now in the case of a double bottom, which of course is the exact opposite, just flip the chart over. Instead of having two peaks, you now have two troughs being at a similar level, and instead of looking at the middle trough, of course, we're looking at the middle peak. So all the interpretations I just went through are identical. Now, just one thing on the peaks or the troughs being in the double top or the double bottom, I think it's important that you don't insist that the two troughs, in this particular case of the double bottom, or perhaps the two peaks in the example of the double top, I think it's important that you don't insist they are the exact price level, because I think what we're trying to do is get an idea of what's happening in the stock and what buyers and sellers are thinking. So it's important really just not to insist that. If it's 1 or 2 cents off, I think we're still forming a similar pattern, and we can make some assessment based on that. I'll also admit and concede to you that, and it comes to back to my rule of V, I had incredible difficulty finding a stock that exhibited a double bottom. A double top you'll find very, very often. A double bottom, however, you'll find, but you won't find very many that once it breaks through that middle peak here, that continue to move higher after a solid medium-term downtrend into the pattern. And it comes back down to my rule of V. And of course, you may have heard that my rule of V suggests that you'll often see prices that rise over time, over a few months, and then come down very, very quickly, but you do not see prices fall like this and then immediately reverse and go back up again. You'll always see the inverted V, but rarely see the V. So that's why I must admit I did have great difficulty finding a stock that exhibited a double bottom, the double bottom completed, and then the price actually rose from that double bottom. So this was one that I did find. I think you'll find, however, that they are the exception based on my rule of V. Just back to this example here of the double top, just to get an idea of what's going on here. We've we've formed this peak here. The price is reversed from this peak because it's at that point where the supply has overcome the demand for stock. So we've had a short-term reversal. We've moved back to this key level down here. It's reversed, formed the trough and moved back. Why did it reverse at this level, at this trough? That's where the demand overcame the supply of stock and it turned around and went back higher. So we know there's demand for the stock at this particular level. As the price moved back down again, why is this level key? Well, if the price moves through that level, let's say next couple of days down to here, all the demand that caused this price to reverse short term and form the trough, all the demand that was here is no longer there. All the demand that was there has disappeared. It's gone somewhere. Either people have cancelled their orders, or probably more likely there's been increased selling pressure, and those people who were prepared to buy have had their orders filled. They've got their price, they've got their stock at that price. There's been an overwhelming supply of stock, people wanting to sell, and all the demand that caused the reversal here has now disappeared, and that's certainly not a good sign.